Hello.
Hi, everyone. Let's wait for everyone to join.
Good morning. Good morning, everyone.
Morning.
Good morning, everyone.
Good morning, everybody.
Can you all see my screen now?
Yes, we can.
Okay, I guess we can.
I can't see it on my side.
Maybe just give it some few seconds.
Right.
Good morning, everyone, once again. My name is Tabitha Chamboko. I'm part of the data and analytics team. We are responsible for the implementation of the FinScope surveys. My colleague Damola, who is the head of SADC Financial Inclusion, will lead the discussion and report on what we'll discuss. I will take all the questions or comments after presenting. Let me just show my face for a second. Hi, everyone. So I'm going to switch off my video. Hi, Papa Lisa. Okay, so in this session, we are focusing on the informal sector, creating jobs and reducing poverty. This theme is relevant to our organization as it speaks to the strategic direction of focusing on financial inclusion 2.0 and the sustainable livelihoods approach. This is the structure of the presentation. I'll provide a bit of background as to why we are focusing on the informal sector, its contribution to the economy, and wrap up with the uptake of financial products and conclusion. So as you all know, our country is battling with high unemployment rate, especially among the youth. So the question is, how can we leverage financial inclusion to address some of the challenges? As I mentioned earlier, that we are now focusing on, we have moved from financial inclusion 1, we are now focusing on financial inclusion 2.0 and generating better livelihoods. Our current work focuses on several areas that impacts sustainable development goals, with the notion of leaving no one behind. As you can see on the screen, according to the International Labour Organization, the informal economy consists of more than half of the global labor force. So bringing it home in South Africa, the informal economy constitutes 42% of all employment. You see this in the next slide, or 17% of the adult population. This is what you are seeing on the screen. So if you see on the left chart, the proportion of people working in the informal economy has been slowly growing over the years, and FinScope data shows that in 2022, 7.3 million people are in the informal employment. And we can see that formal employment has slowly been declining. So this shows how the informal sector is contributing to job creation, helping to reduce unemployment numbers. The informal sector is also the main absorber of marginalized segments, such as women and youth, etc. So like I mentioned before, that we have 42% of adults working in the informal economy. This is for the total labor force. This excludes the unemployed, retired, students, etc. So the workforce consists of those working either in the formal sector or informal sector. That's how we got the 42% of adults who are working in the informal economy, which is around 7.3 million. In the next slide, we'll unpack who is included in the informal economy. So the informal sector includes, as you can see on the screen, domestic workers, vendors, those who do piece jobs, part-time jobs, including also informal business owners. As you can see from the absolute numbers, the informal sector is mainly dominated by those who do piece jobs, like trade persons, part-time, those people who work for different individuals and vendors, etc. Those are the people who are dominating the informal economy. So aggregating these different type of activities, it shows that the majority of those working in the informal economy, actually employees, we have 61% there who are working for another individual. Just looking at the gender a bit, overall, we have more males working in this sector. However, if we look at the different activities on the right there, we can see that females are dominating more in some of the activities. For example, domestic work, beautician, waitress, there are some of the industries that females dominate. In terms of earnings, we can see that this sector often is associated with low earnings. We can see that few sectors, those highlighted there, in above the national minimum wage of 3,700 rands per month. However, the interesting thing is that 60% of these adults are above food poverty line. So this shows that this sector serves as a buffer against falling into deep poverty for many households, although the wages are low. The main focus of the FinScope survey is to look at the uptake of financial products. So before we discuss ways in which we can support the informal sector, we can have a look at how they engage with the financial sector. Financial is, as you can see on the screen there, high numbers. Financial inclusion is also high among the adults in the financial sector. However, if we look at the uptake of savings or credit or insurance, that's where we can see the big gaps when we compare formal versus those working in the informal sector. We can see lower proportions. So, for example, we have 75% of adults in the who have a bank account, and only 3% of adults in the informal sector are excluded. And in terms of life cover, this also includes covered by someone else. So we have picked a few products. This is not the overall levels of usage of insurance or credit, because if we look at credit, if we include family and friends, then the proportions are almost the same when we compare formal versus informal. But when we look into the different products that we include in this in the financial products, that's when we see the gaps. And when we look at informal funeral cover burial society, it's actually uptake is higher among the adults in the who are in the informal sector compared to those in the formal sector. Since we have a high number of people who are included, we can see that how are they using their digital financial services. On the left there, we can see that majority of those working in the informal sector earn income as cash, and they mostly transact in cash. We have, in terms of payments of goods, we have 89%. In terms of receiving income, we have 64%. So cash remains the most dominant form of payment for those in the informal economy. Could it be that maybe cash is perceived as cheap and very convenient when you want to buy your vegetables and etc.? You can just take your cash and go to the vendor. On the right, we can see that less than 50% of those in the informal sector paid for goods and services, around 47%. They paid for goods and services digitally. So do we have, another question that will arise is, do we have the proper infrastructure in their communities to support those who transact digitally, or maybe they are avoiding to be charged when they transact all the time, especially small, when you have small income, you are very particular of every cent. So as we have seen earlier, few sectors in the informal economy earn above national average income. So how can we support them? In the last survey, we sought to understand who get tips and what proportion is it to their income, and around 21% or 1.5 million adults working in the informal sector earn tips, and majority of them earn less than 20% and in proportion to their income. So although tips are low, these small monies make a difference for those who have low wages. Majority of those, if we see on the right chart there, majority of those who receive tips fall in the category of domestic workers, waiters, and trade person. So as I conclude, the survey also revealed that 90% of adults prefer to pay tips in cash, but the challenge is people do not always have the cash with them always. We can see on the bottom there that 27% of adults reported that they tend to pay more when paying digitally. So are there solutions out there that make payment of tips easier digitally? For example, use of barcodes, because obviously transacting digitally and entering all the details takes time. So the challenge we have on our hands is, are there solutions that make payment of tips easier, especially digital, when you don't have cash, but you want to make a payment? In conclusion, the informal sector, as you have seen, it's worth supporting as it forms a large part of the workforce. Let us continue to support those working in the informal economy. They need access to infrastructure to support their work. And also working conditions are often difficult with few protections against shocks, which points to the importance of tackling decent work and social protection. So before my colleague leads the discussion, I'll leave you with these few questions. How can we make informal economy and self-employment, because it's included in there, more attractive, especially to the youth, because the high unemployment numbers are also high among the youth. So how can we make financial markets work for this category? How can we leverage financial inclusion for sustainable livelihoods? Also, how do we change attitudes, perceptions towards the informal economy? Thank you very much. Over to you, Damola. Questions, contributions. I know, Mr. Roloff, you always have something to say. So, yeah, you can.
Sure.
Yeah.
Thanks, Tabitha. And colleagues, this is meant to be interactive, but
Yeah.
what I would want to just say after Tabitha's presentation is that what we see here is, obviously we have two layers of the economic system. You can either be absorbed in the formal economy, which is subject to exogenous variables and some that are endogenous. And so to some extent, we cannot control what might be happening in the global markets, which South Africa will be susceptible to. And obviously, people are resilient, and even if they're not able to get the white collar jobs that are there, they're going to figure out a way to make money outside of that environment. And a key feature of that environment is that, as we all know, is that it's cash based. So this is the cash economy. And once we are within the context of a cash economy, then formal financial inclusion would then be the need or the intervention from our perspective as financial inclusion stakeholders or formal financial inclusion stakeholders, not to discount the role that informal financial service providers play in here. So how do we create an integration between the informal cash-based economy and the digitalized financial services space? I think that is a key question. And obviously, some of the drivers there would be whether or not digital store of value, digital savings, or the digital transfer of value, the cost of engaging in these activities mimics using cash at the transactional level. But obviously, one also needs to consider the total cost of either saving digitally or transferring value digitally. So it would be interesting for us to kind of get a sense of some of the cost drivers around that. And there's also the issue of consolidating once you have a percentage of folks in the informal economy that are already banked, as Tabitha has shown, and for them to maintain a digital financial history or footprint. A key feature of that, over and above the fact that there would be a social assistance that might be required because of the low wages, as Tabitha has shown. So there'll be need for remittances, but there will also be a need to consume, so to make payments at merchants. To what extent would they prefer a digitalized a form of making merchant payments as opposed to cash? And what would be some of the key drivers of that? With the colleagues on the call that are actually the agents of change or might be regulators or have experience in this space, it would be interesting to hear from you your thoughts around some of the key levers that might move us from a pure cash-based economy to facilitating the integration between those that were engaged in the cash economy and those that would move into the formal financial space in terms of using digital store of value, using digital transfer of value, which then allows them to access things like credit because there would be the basis for risk assessment. They'll be much more visible. So knowing people in the informal economy is also quite key. So that would be my preamble here. And Tabitha has talked about some aspects of how people can decash. So in terms of tips, for instance, that is a glaring gap that we've seen in the research, given that a lot of people also depend on tips that work in an informal economy. And it's quite difficult to receive tips digitally, given the existing technology around that. So it would also be interesting to get a sense of how that could be enabled and some of the technology or the financial services that could push for that. One would imagine that the introduction of PayShap can meet that need, but given that PayShap currently is dominated by commercial banks, to what extent can non-banks also play a role in facilitating and enabling a vibrant merchant payment or remittances space? So that's what I would say. And I now want to open the floor to get some reaction, and you can tackle based on any of the themes that I've mentioned so far. So I would take a question. Mr. Hussein, please, you can have the floor.
All right, I'll be brief. It's not a question, not a comment. And that is, I think you're talking about informal employment, informal workers, rather than the informal sector. And one has to accept that in the formal sector, there are many informal jobs that are prevalent and maybe growing, I don't know, depending on the structure of the economy. And there's a difference between supporting the informal economy and informal workers. And I think it would be worthwhile just to make that distinction. And when you look at interventions that can probably achieve that, keep that in mind. In the informal economy as such, you're looking at supporting informal enterprises, not informal individuals. And if you look at informal workers, that's a different issue that you have to address. It includes, of course, people that work in the informal sector as such. So I have a slight problem with this little diagram that you have there. It's too simplistic. And just something to keep in mind when you say the two are equated. The minority of informal enterprises actually employ a significant number of people. It's a small percentage. I'm not discounting the importance of that part of the informal economy, but to equate the informal sector to informal employment is, I think, glossing over some of the issues that one has to address. So that's just a generalized comment. The other one is about this a new payment thing, whatever it's called. That still is based on the design of that, is based on a store of value in a regulated financial institution. So that's what you have to participate in that. Can that have an impact on the utilization of digital payments in different spaces? What typically would be referred to as the informal space? Yes, it has, but it will have to travel a bit of a road to get there. Like I said, you still require a store of value at a regulated financial institution to participate in that. So there's some comments to stir the waters.
Well, thanks for that, Roelof. And I totally agree with you in terms of the distinction between informal sector and informal employment. I totally agree with you there. As such, it means that the conversation is not just about being employed as an individual, but also being an entrepreneur within the sector itself. So we also need to think of our target groups in the context of a business that is existing in that space and someone that would be employed. And those two entities would require different things from a formal financial services perspective, even though at a broad level, the services themselves intrinsically will be the same, but their needs will be slightly different. And it's quite important to distinguish that. Do we have any other comments? Minette Peters, the floor is yours.
Thanks. I'm very interested in terms of, so we want to stimulate self-employment and getting people to start their own businesses and, therefore tackle unemployment. But what are we doing in providing financial assistance to people to start their own business? If we look at the average salary in the informal sector being 2,500 Rand, where are people supposed to provide for their families and have the capital to invest in starting their own business? So although I do agree that this would be a great stimulant for reducing the unemployment rate, I don't understand. It just seems like quite a rose-tinted answer to a problem without actually looking at how will we provide financial assistance to people, how would we provide capital for people to help them become self-employed. Yes, they could go to a bank or they could use the cash underneath their bed, but I mean, the chances that they'll be denied a big loan because they probably don't have efficient credit scores, et cetera, or the interest rates are just insanely high on their loans that they're given. So yeah, I don't know if I just don't know the answer to that, or if someone knows of how we are thinking of, or how we could be providing financial assistance to stimulate self-employment. Thank you.
I think that is a very good point. I don't think even accessing financial support from a bank or a non-bank in the form of credit would result in successful businesses. I think it takes more than just access to credit to be a successful business person. And a lot of people who are informally employed are not, who might also exist in the informal sector as small businesses, are not necessarily oriented to be businesses. They're probably just being engaged in a business enterprise because there is no job. So the acumen to pursue a business might not necessarily be there. And as you've mentioned, they might not also be visible or have the level of footprint, digital footprint in terms of a payment history, or meet the criteria to access the type of financing that would help build or expand their businesses. So you're quite right. It would be disingenuous to say that access to finance would be the panacea to then facilitate, or I suppose it would be a simplistic way that access to finance then ensures that there will be an expansion of small businesses. I think it takes way more than that. There will be need for business development support that needs to be accompanied with that. But obviously one also needs to do better segmentation of the data to establish the businesses that are actually perhaps have evolved, that are not at a startup stage, that have been resilient over a period of time, to then identify the key businesses that actually be drivers of change that could potentially employ more people. But not all businesses actually require that intervention per se. And some of these individuals or businesses are probably meant to be recipients of social protection from government, and might not necessarily be a financial inclusion issue, besides the fact that they might require a formal financial platform to receive that social protection. But I'm very happy to get other thoughts on this. I see Roelof wants to speak. Go for it.
Yeah, I was just going to kind of agree with that. The segmentation issue, I think, is very important, that both you and the previous questioner raised, is that there's a case to be made out that you look at the micro business, the individual one-person businesses, and not exclude them from financial inclusion, far from it, but not have this expectation that this group is going to provide employment for other people, that they need to be fully digitalized, that they need to formalize and pay taxes. Just get rid of that notion, if possible. I'm oversimplifying now, and treat them as these are businesses that are there to essentially support a family and provide state support. There's no government money at the moment, it comes from your tax money. But provide state support where it's required, and rather focus on those that can grow or provide employment through both financial inclusion and business support services. So that's I think the segmentation that you require, and I think it's not a South African phenomenon. That's worldwide. That is the case. I think it'll be good if one can acknowledge that, do the segmentation up front, and use the data to get to the actual needs of those people. And like you said, most of the needs probably are not financial.
Thanks, Roelof. Siwe, Yangeni, over to you.
Hi, thank you. Thank you for the presentation. I think my thoughts is around the newly launched PayShop by BankServe, which is meant to simplify the payments between different banks and make it more instantaneous for people, because we spoke a bit about